How are you doing?
Bloody awesome.
Bloody awesome.
How are you, mate?
Not too bad. While we wait for the others, I'll give you a Melbourne quick debrief. I'll edit out the key parts. How are you, Ash?
Hi.
Hey, Ash.
Sorry, just saw your message.
All good. Yeah, Melbourne was a great trip. Knackered. It's not that I want to do triathlons, it's that I need to do them to just have the baseline of health and energy to actually play in this game. But anyway,
We had a pretty intense schedule. Back to back to back to back.
Yeah, well, Wednesday started at 2 a.m. and then it didn't stop essentially till last night. Although, let me just confirm the address for the flowers that are being sent to my wife this morning. I did not cover myself in glory. When the reaction to the thing is bigger than the thing, it's not the thing, which is not my best self, but I need to get some sleep. The joys.
The joys.
Who did you end up locking in for Melbourne, Don? Did you get to meet with?
Yep.
How was he?
Yeah, he was really good. He had done a lot of research, pretty well knew the school I went to, my lack of good grades. He had done, it was good. Then had some real insights into the fund and gave a bit of the deck, but it's like the conflicting advice we give quite often. I like to put the founder information at least in the middle, because it's hard to evaluate who the founders are if you don't understand the thesis and what you're trying to do. His feedback was, well, for ESVCLP, we're really backing the founders, so that should be the first slide. I was like, okay.
It is funny chatting to all the different potential investors, how they each have completely different points of view on the order of the slide deck, the things to emphasize, the questions that need to be answered. I still come back to less is more, leaving things out deliberately almost too.
But here's the thing, right? The deck is not to get money, it's to get interest. Nope. So the deck worked. It got me a coffee with him, 30 minutes in the calendar that turned into a 90-minute meeting. That's all that I needed to worry about. And then
I would have also already probably spent an hour, if not two, on the phone with him.
There you go. Yeah, oh, there's a bad echo.
It's Jack.
Live golf, Jack.
Live golf, Jack. Yes. God, I actually caught it when I went to live golf. They throw it into the crowd.
So good. But there's a terrible echo. But no, he'd done his research. And then the large wealth manager, totally different again. It's like they run $5 billion of assets. 90% of our people come here not to lose any money. There's a 5% that are interested in the space. And this is how you need to present it in order for us to put it forward. And that's a relationship, Aaron, you've been curating for many, many years. And it was just interesting. He said, how's Aaron? I said, oh, good. We're dividing and conquering now that, we've got to get this thing sold. He says, yeah, he sends me an email every 6 months and I read it, and I probably don't get back to him, but they're always interesting. I've been tracking you guys. And so in that moment, you just realize that all this bullshit you hear of, oh, they raised X dollars in 2 weeks. No. Years of plowing the field, of getting no feedback, of getting fuck all interaction. But if it's of value and they think you're credible enough, when the time comes, they'll have a chat with you.
Yeah. It was actually a little bit heartwarming to hear that feedback, because you do so many times, you send out so many comms and just direct messages and you don't hear anything back for such an extended period of time, but you have to keep going. And there's so, I think we talked about this, was it last week? Talking about Gopi and One MRI, the value of consistency, just being consistent with that messaging, even if you're not getting the interactions back, because it will pay dividends eventually. You called me from on the way to the airport, I think. Oh no, you're already at the airport last night. And I could just sense your excitement. But hence why we do what we do, right? We've called it Tribe for a reason. We love the people interface, and I think we've just got to get more dates locked in the calendar for different cities and fill up the days.
Ash and Jack, you'll have to come. You can't just be sitting, pumping out IMs and leaving messages for investors and playing with spreadsheets. You gotta come on the Dog and Pony show.
I'm all for that. If you want to make the 125 calls I made yesterday instead, happy to switch places.
Is it getting?
I'm so curious. Yeah. I'm so curious for the download on that at some point, Ash. All those combos.
It was interesting. Good learnings, lots of notes. Lots of edits required to the list, but it's the only way we know.
I had a little read the beginning of the latest IM that you're working on, Jack. It's a bloody cracker.
Yeah, getting there. I feel like we're pumping IMs out every week at the moment.
You've done really well, Jack. Like it's a good doc.
Whereas the one I wrote, you could probably go, sponsored by OpenAI.
Mine's still sponsored by OpenAI, so don't worry, Don.
Yeah, but you've done it.
Right now.
You've done a much better job polishing it. Oh, and the other thing with the trip was also there were 3 portfolio thingies as well, which was really great. While I was in Melbourne, I did a remote session for the Gaspot team. That team is implementing the change and improvement councils like you wouldn't believe. They are getting through stuff by adding that parallel change improvement part of the business. So it was a great session.
That's bloody awesome. I love Phil. Like you give him something and he executes. Like he just goes full on at it. So that's great to hear that they're getting there.
Yeah, I was going to say, Don, like, are you surprised? Like, you give Phil something to do, and of course he's going to do it.
I'm not surprised, but what we're talking about changing is a way of working where an entrepreneur shifts from I'm the center and I have to direct and do everything. And we're shifting to a culture where I'm the entrepreneur that has to ensure the environment exists where everything gets done. That's a different way of operating, a different way of behaving, a different way of thinking, and it's not easy. So you're right, Jack. I'm absolutely not surprised. I guess the surprise is the speed at which they've been able to start to get with the program. It normally takes a little bit longer, but like that, I don't know who says it's probably Tony Robbins or whatever, like change can happen in an instant, but it only happens when the pain of staying the same becomes too great compared to the relative belief of the pain of the change. And so when you can simultaneously get to a point where doing what we're doing is clearly just not going to get us the global behemoth that we want to be, and then my role is to simultaneously try and demonstrate the pain of the change isn't as much as you need to worry about. So yes, I'm not surprised that they had the ability, Jack. Just the speed. So a good call out before I get a series of texts. Mainly because that whole team listens to this podcast, and they keep reminding me of all the dumb stuff that comes out of my mouth, and which makes me question my authority to actually lead these sessions. But anyway,
So you centralized. Okay, that's good.
And you caught up with Canopy and one breadcrumb as well?
Yeah, twice with Nigel from Canopy. He is so SaaSta in the UK have put out a little tool that you select if you're AI or if you're not AI, and then you put in your last year's growth metrics, and then it gives you a series of averages of what like the UK, the US, and other markets would value at right now based on other raises, and it spat out like 380 million, and I was like, yeah. So, but his ability to keep a cool head but still drive hard. There were some difficult times that he got over, and as we discussed, if you sit on the riverbank long enough, the bodies of your enemies will float past, and the game is stay in business. So then that way you're ready.
He's going gangbusters. I love that SaaSta tool though. I mean, and I think those different market valuations also just, if he raised at those sort of hours, I think we'd be seeking some secondaries.
Yeah, that's true. And then, had a great, just a first time face-to-face down in Melbourne with the one breadcrumb team and with Chris and Shayna. Yeah, that was really good. Where their office is in a part of Melbourne that's like, it's almost like Shoreditch, almost exactly the same. Low rise, quite industrial, cool, like little cafes and stuff tucked away. It was a good little vibe, and their shared co-working that they're in at the Commons is actually one of the better ones that I've been in. So that was good.
Making me miss London.
Well, we'll be back soon enough in June. All right, well, let's get into it. A couple of recap items. Seek has now come back at Employment Hero. It's an article in the AFR. According to Seek's new filing, Employment Heroes sent emails to candidates after they'd applied for a role on Seek, suggesting they need to sign up to Swag. So Swag is Employment Heroes app, so that the hiring manager could then contact them directly. It then also prompted applicants to sign up for swag to check the status of their application when this step was actually not required. If the candidate did follow the prompts, the fields required to set up a swag account were at least partially pre-populated with information that was obtained through Seek. So that's what Seek's it seems upset about. Their view is that is I assume they're saying you're using us to get new users onto your app and bringing user data from us into your app. And without wanting to try and get too much into that, because we don't know the full detail, from a growth hacking go-to-market, like these are the kinds of strategies that are required to build a business, aren't they?
Yeah, that was my reaction. Almost want to say, well done, employment hero. Like,
well, that growth team, like whoever, like, yeah.
I don't know. I kind of read it and just think, well played.
Now, if Seek's, it's Seek's platform, right? We're not communists, so if they don't like this and they want to update their terms of service and they don't want it to allow, I also think that people should have sovereignty over their environment, and may the best people win.
Yep.
It was noted, Jack, last week there were 0 lessons for founders from Jack Butler. So I'm going to push you this week. What's a lesson for the founders?
I got nothing here, Don.
Go to Live Golf so you can get some free swag. You really are speaking of which, Nigel has new swag. These black jumpers, which for a aging 42-year-old male who just somehow can't get on top of his belly fat, I think is going to be very helpful for me. But there's some more coming for you in the mail.
Oh, how good. If I had like a count of how many times I've worn my canopy jumper, it would be stupid.
All right. Anything else on this? I think it's a competitive landscape, and you do what you're going to do within the bounds of reasonableness, I guess. Another recap, because we've discussed it a number of times, but there was an article in Startup Daily that crowdsourced funding platform Birchal is increasing its clip of the ticket on raises under 500,000 and shedding roles for the second time in 14 months as the CEO, Kirsten Hunter, looks to put the business on a more financially stable basis. They're increasing the fees on sub 500,000 and decreasing the fees for over 500,000. I think the signal to me there is like you don't do fee changes to decrease your revenue base. So obviously they've got a lot more raises that are that sub 500,000 than they do above 500,000, which makes sense from what we've seen. They've also increased the campaign fee by 66% up to 7,000. Simon says the crowdfunding more broadly has tailed off amid tighter capital markets. The mix of companies looking to raise from retail investors has narrowed amid some notable investments going south. He talks about Zeroco's record-breaking 5 million Birchal raise, and then another 2 million in 24. And investors are still waiting to see what cents in the dollars that they're going to get back. The situation appears even tougher in the first half of 25. Currently, Birchal has only one campaign in play, a Sydney startup called Tall Emu, and a recent raise for a skincare brand failed to catch investor interest. The whole market has some challenges, I guess. And I think crowdfunding, if my memory serves correct, when VC really started to slow down, there was still momentum in crowdfunding. And then it's just been slower to catch up. And given, was it Equitize that went into administration? They're not immune to slowdowns.
There's a line, a quote in there. This has a big impact on the cost of living pressures experienced by our retail investors. And I expect to see previous investors returning to the platform and new ones coming on as the pressure continues to lift. And she's referencing interest rates. But I know this is for retail investors, but I have a bit of an issue if you're targeting people who are struggling with the cost of living and not deploying into venture assets, and you're hoping that as interest rates come off, the people who are basically just break even in their family budget from that description are going to be enticed into this high risk asset class. I just have an issue with that.
Yeah, no,
I know we play at the other end of the spectrum with wholesale investors, but
Chris Gillings, who can be as dry as the Mojave Desert, but funny as fuck, every now and then does remind me that the way we met was me pretty well attacking him for asking questions about crowdfunding. That always just sits there. It'll always be part of our connection, which is good. But I think there are so many things that crowdfunding needs to resolve. I'd love to see it work, but the more we see what's happened in there, yeah. And Venture Crowd reached out a few months ago for Steve from Venture Crowd to come on the podcast, which I said we'd happy to, but what I said was we'd be happy to have Steve on, but we'd want to include a part where we were unpacking the issues we see with crowdfunding. We engaged with James Kwan a few times, great listener of the show, and I always appreciated the discussions we had. I just said it's a complex topic. We like the idea of crowdfunding, but see some challenges with the incentives, regulatory regime, etc. So if you were happy to have a broader conversation that included those, we'd be happy to have Steve on. She went away and had a chat with the team and came back and said that they're a bit busy at the moment, but they wanted to engage at a later date. I think it would also be good to look at the ability for people to engage with entities that have an incentive in their outcome where the majority of their money and their reputation is versus the incentive in getting the listing and getting the fees. I think that some balance in allowing people to look at those two worlds, whereas at the moment, retail is excluded.
Yeah, I agree.
Lesson for founders, Jack? No lessons?
No lesson there, Don.
I'll throw one out. It's like beware of the behavioural incentives that are in any system.
Well, what was the saying that Jack found in one of the episodes? Back the people that are going for the 20 and not the 2.
Yeah, exactly.
And this year, what's really hurt Tribe is us backing out of 2 deals. One, we had the money in the account. That has hurt. But we're interested in the 20 and the long-term investor relationships. And we're now hustling hard to plug a gap that we weren't expecting.
To Adrian DeMarco's words, the short term has to align with the long term. You can't be doing short-term behaviours that cost you the long term.
And as I keep promising my wife, one day, darling, private school will become an option. It's a thing called carry. But for right now, the public system is a good system.
Oh, sorry. Sometimes private school is just not required.
Given I'm the product of one,
So
it's
am I.
not only not required, it would seem to not be ideal. But that's a different. I'll bring you over for dinner one day, Ash, and we can.
Oh, I will fight for public schools, hand down, every day.
Yeah. Well, so segueing a bit, a common thing we get in VC that anybody that says investment in female to male founding teams not being 50-50 is just an excuse. And a quite balanced article came out from Elaine Stead that was then published by Startup Daily. And it says the female founder funnel myth and what it means for investing in women. Elaine said yesterday there were numerous articles written about the fact that a couple of large VC funds miss their gender targets for new investments. We do ask our VC funds for more transparency and effort, and then low-key shame them when they don't meet their own goals. They state publicly, even if they're moving the needle by managing what gets measured. Some will call this accountability and that moving the needle isn't enough. Some will mock their efforts. Some will be happy to see iterative progress. As a VC, I understand practically why measuring the funnel has merit, but it's insufficient. You can increase the diversity of outreach. You can set up blinded processes. You can measure how teams move through the funnel to make sure that there aren't inherent biases. And all of that should be welcomed and encouraged, but you can't cut the numbers any way you like. And it won't change the fact that before you even get close to the funnel, there are fewer women founding startups. I don't say this to excuse any apathy and trying to improve gender diversity in companies that get funded by investors. I say this so we actually start to confront the real challenge that ignored will never solve who gets funded, which is where most of the focus and the media attention lies. She goes on to say that the data shows in Australia the percentage of women startup founders is around 22%. That stat may flex up or down a little year on year, but it sits at this space and is higher than the average global average of about 15%. In line with this, the percentage of startups with mixed founding teams are generally around 31% globally. As a VC, I can attest to the fact that there's only so much you can do to ensure you are seeing all the best opportunities. If the number of women founding teams, co-founded or female founded, are not there at the foundation stage, the math just doesn't stack. As a VC, she believes none of the following statements are true. Women are less entrepreneurial. Women are less confident. Women don't have great business ideas. Elaine then says that the reasons why there are differences in the number of women founding startups is that women shoulder the majority of childbearing and caring responsibilities. True, sort of makes sense how the whole system works. Women bearing the majority of elder care responsibilities and the impacts on time availability to dispose. Women are still not experiencing equality in the split of domestic duties, undertaking the lion's share of domestic labour. Can I just defensively and in a most childish manner point out that my wife has never once ironed one of my T-shirts, and I do all my own ironing?
Wait, do you iron your
your
T-shirts?
Hello, have you ever seen me in a creased shirt of any kind?
Well, I don't iron my T-shirts. Have you ever seen me in a creased
You don't have to iron. Yours are too tight.
Considering you've turned up to more than one meeting in one of Marin's T-shirts.
True. All right, I'll close my mouth.
We don't only invest in B2B tech companies. We also run missions over to the US and the UK, as well as offsite, which we open up to the broader ecosystem. That's founders, that's investors.
Our missions are about taking founders and investors into the UK and US markets so that, one, they can understand what it takes to scale into those markets and set up shop in those markets, but also to see over the horizon into the latest tech, how capital's been allocated so that they can come back home and transform and scale their business.
Yeah, I like the way we put on panels of founders that have been there and done it, panels of investors. So then that way they get some time pitching to US or UK investors, the channel partners that we put them in touch with. It's really trying to get them into market so they can establish exactly what they need to do in order to scale a really great business over there.
Yeah, we really prioritize this not being tech tourism or something that you could simply YouTube or Google or GPT the answer to from home. It's really about experiencing and immersing in these environments where you viscerally experience scale. You get to understand disruption and how these technologies are actually being applied in market, and therefore how you can navigate and build a scalable business into those markets.
If this is something of interest, shoot us a DM. And enough of that, back to the podcast.
All right. We need to get back onto topic. So I absolutely appreciate the frustration of many female founders that are not getting invested that think that they should. I also think that we need to be able to simultaneously be able to handle multiple conflicting things in our mind so that we can really get to the core of an issue. I think there will be a lot of female founded teams that are not getting the funding they deserve relative to their male counterparts. I also think that there are far less female founding teams in the first place, which Elaine's article highlights. I think sometimes it's easy to get caught in the venture and scale up bubble, but if you zoom out to the population as a whole, not just people seeking venture capital and growth capital, but the whole population, women and men are not the same. There are fewer women across the whole population that have the desires and the impulses to build and allocate the time, your life, your energy in the manner that's required to build a venture scalable business. I don't think it's going to be 50-50. And the emotion and energy that goes into it, because people believe it should be 50-50, I think actually harms the conversations that are required to make progress to solve the issues that are clearly holding many female entrepreneurs back. What I think we need to be measuring more is around the equality of access. For those that want to go down this path, that there is equality of access, that we remove the biases in the system, that we have a look at the artificial barriers, that we have a look at the structural challenges that are clearly in the way of female entrepreneurs, without us constantly being told there's no pipeline problem. Now, at the same time, it's very clear some of these structural problems that Elaine puts forward. There's also other issues. Like, I have a personal view of what it takes to build a venture business, but certain behaviors by men get rewarded and are seen in a positive light. Those exact same behaviors often women get punished. Often women get shunned. Often women get held back. And so there's a real problem there that needs to be discussed, because often a lot of those types of biases, I think, are subconscious, and the people perpetrating those biases don't realize it. There's still old school biases of whether you can do these things with a family. And I absolutely believe that you can. This idea that it can't be done, I think, is daft. It's just that there are some very perfectly rational reasons that there are fewer female founders that want that life. And to keep saying that there's no pipeline problem, it should be 50-50 already. It's only biases by themselves in the system that stops it being 50-50. I just don't think is supported by reality. And I look forward to, I'm sure, a lot of feedback on my views. But if a big group of people say that it's only bias that stops us getting to 50-50 and that there is no pipeline problem, to me, that's just daft. And we're just going to spin around in a merry-go-round and nothing will change.
I don't disagree with those comments. I think, like, from my perspective, I think, Don, the point you started with around there's different tendencies. I also think that if you take into consideration those last 3 points that Elaine mentioned, where majority of childbearing responsibilities, elder care, and then domestic split. I also think that there is a lot of extremely entrepreneurial females who founders or business owners, but they have founded a business that enables flexibility. That may not be a venture backable business, or they have a small business that they can do that kind of fits in with their family. So I think that if I've not looked into this data, but I would be really interested, because I agree that there's a lot of issues and there are some biases and there's some structural things, as you said, Don, that we should think about and try to work on and remove. But I'd love to think about this as a broader conversation. It's not just venture backable businesses, but businesses more broadly.
Part of this conversation is actually, it's a funding problem of the different types of funding that's out there. And the likes of Cut Through Venture report, it's in the name, venture. It measures venture funding, but there should be other types of funding covered by other reports, supported maybe by other institutions that can actually get behind different attributes. But that gets lost in the noise, I think.
I love this post by Lainey. I think it's so important we look at the data across the whole of funnel. And we've talked about these things before. I remember Lainey talking about this previously with us. So I'm a huge fan of this post. I'd love to see more data tracking not just female founded business like ventures, like scalable, backable venture businesses, but also how many of them are B2C versus B2B, for example. I mean, given the wheelhouse we play in, I'd be curious about that.
On that, I can then get behind there is a funnel problem, that there are women being held back getting into the precursor world that then creates a B2B business.
100%.
I absolutely see that happening.
There's multiple layers of solution that will be needed. And I love this greater focus on the data across the funnel. The other thing I'd be really curious, given there's been so much commentary for so long that the issue lies in predominantly male VCs making the investment decisions, I would love to see data actually on, because anecdotally what I've seen is more females entering VC, admittedly at different levels, so there is still a question mark. I'd love to see the data on who's in the decision-making roles. But if I think of London in particular, when we're there meeting with VC partners, we are typically meeting with women in those roles. So I'd love to see with the actual breakdown, and if there has been a correlation in shift of funding that's resulted from that, because the latest data across the board is everywhere is still sitting around this 2% level of funding going to female founded or co-founded businesses, despite these changes. So I think we need all the data everywhere, and it's a healthy exercise.
Well, Aaron, think about SA, right? Although, we technically have only just got our first fund with East End Ventures off the ground that is, headquartered in South Australia, there is 8 of us, 8 females in VC in Adelaide. And there are another 3 people in the state, Jack being one of them, and 2 others, and they're male. So we dominate South Australia from a presence. It's a small data point, but when I was trying to get into VC a couple of years ago, it was, oh, well, if you can only be in SA
if you've already been in VC, because you have to, you know, get the kind of tick of approval to be able to work out of Adelaide. And, you know, and like, then all of a sudden it's like, oh no, we start doing these lunches and it's like, oh, there's 8 of us. Oh, there's 9 of us.
Yeah, and Ash, that's going to help fix the pipeline problem. But, you know, Elaine's article is, I think, very balanced, and it puts forward some questions that are in the face of the traditional posts that have been more recent, are people saying that there is no pipeline problem. It's all to do with VCs, specifically male VCs. In one of the articles, it went as far as to say that male VCs make decisions not to invest in female founders. So there are good deals, but because male VCs are in charge and there's a bias against women, a male VC wouldn't do a deal because, if I remember correctly, the article says something like, it's a fucking decision. So my challenge is that there is a pipeline issue, and simultaneously multiple things are true. There should be more venture funding going to female founders. And at the same time, I think there's some rational reasons that it may not get to 50-50. But to say that male VCs have such a bias that when a deal that met clear venture criteria, and again, there should be a range of funding sources for a range of different types of businesses, from small businesses to venture businesses, debt, credit, equity. There's a whole range of things to discuss here. If there was more open conversations on all of the different factors and people could sort of engage their critical thinking skills whilst doing the best we each can. I mean, how many times has Tribe, for each of its more recent missions, its offsites, we've paid for female founders out of our back pocket as an emerging manager, because we know that there's a funding and financial disparity. It's not huge, but we're a very small emerging manager. But after a while, when there are just these constant posts and this constant rhetoric, it can be a little bit easy sometimes just to go, oh, fuck it, I'm just not going to get involved. Let's just concentrate on running our own race, building our own business, do what we can when we can, but don't be a vocal part of trying to help, because you're just going to have people that, I think, incorrectly don't look at the entire picture.
Yeah, and to be fully transparent with our own data, so 13 in the portfolio with our latest deal that's not quite yet complete, but pretty close. 2 of those ventures are female co-founded. So by number of deals, it's 24% of our transactions have gone to female co-founded ventures, and 20% of capital, so actual dollars in, has gone to female co-founders. Yeah. This isn't counting, we've got a deal coming up, about to go to IC, which is solely female founded, 2 female co-founders.
And it's a cracker.
Yeah. And we were sitting around 40% at one point, but the latest deal is a reasonable check size. It's kind of thrown out the stats a bit.
Look, I think some balanced conversations that don't try and pin it on one particular thing, that opens up multiple conversations, but is also just a little bit reasonable and rational of what different parts of the value chain can actually deal with. And at this phase of the life cycle for Tribe, we can't do anything about the number of females coming out of university going into B2B related stuff. Maybe when we've got $1 billion under management, we can help.
Also, Don, let's not discount the fact that we're having this conversation as a step in the right direction. No one has knives out to prove each other wrong. We're actually just all trying to understand each of the different perspectives, get all of the data we can. So if people have data out there that they think we should be aware of, send it through. But I think that just being able to have more of these conversations with different people across the ecosystem, knowing that it's a topic that has a lot of emotion, but if we can actually take the knives off the table, we'll all learn. And I think that's really a good step.
I've got to do this quick board call with the US for this family office investment. That's Ash, you've got a hard out, don't you?
My meeting just got pushed back 15 minutes.
Okay, so I'm going to try and make this as quick as possible. All right, I'm back. It took longer. I'm sorry, Ash.
No worries.
Does that mean you've only got a few minutes and therefore you're going to miss charts? Is that what you've actually done here? You've organised a meeting?
If only I was that clever.
All right. A thing I thought was quite interesting, why startups die. And Zamir Suko actually put together a little chart of the worst mistakes founders make. I thought we'd just quickly rattle through some of them. solo founder syndrome, number one. Flying solo often means slower decisions, fewer ideas, and burnout. Great startups are rarely built alone. I think that's true, but there are some exceptional solo founders that are able to coalesce a complementary team of different people and still be able to get the critical mass that it takes to build a business. But what it takes to start a business, which is a bit of dictatorship, drive, control, all of those kinds of ingredients, isn't what sustains it later. Now, complementary teams tend to have both of those ingredients together, but if you're someone who can handle that balance, Nigel from Canopy is an example of that, then you can still make it work.
Agree.
Wrong ecosystem. So they build in isolation. You miss out on talent, feedback, momentum. I think that is probably right, but to a sort of lesser extent.
The only thing, I think to a lesser extent, like I think of some of the best founders I know have built in isolation, and then they suddenly pop up into the ecosystem when they're doing bloody well. So I understand the sentiment saying there, but I would argue this one is less of an issue of itself.
Yeah, I think weak dev talent, like there's 15 of these. We won't have time to go through all of them, but I think weak dev talent, especially in this environment, you get someone on board for 3 months that turns out that they're 15% more shit than someone else. That is a compounding effect that after 3 months leaves you well behind and you could die.
Yep. I think number 8, launch paralysis, waiting for perfection. I agree with that one. Ship fast, be embarrassed by the previous version of your product. It's hard in the space we play when there's enterprise clients, but...
Well, the very next one is premature launch. And so it is a difficult world founders live in. Investor overreach, letting investors steer your ship. And that, on one of my conversations on Wednesday, I did become really connected to that because my advice, not on everything, but just on a couple of small things around how to build a highly scaling company, conflicted with somebody else's advice. And I did in that moment go, it is difficult being a founder to digest these things. And I think at best, all I try and do is a bit like what I imagine teenagers are going to be like. You've got to let them do their thing, but never kill the relationship where you've been so dictatorial that they don't want to call you when what you've said is going to happen happens. And so often, and it's happened with a number of companies, you just lay it out and say, hey, this thing's really strong over here, but over here, these are the areas where it's weak. This is what tends to happen. The problem is until they've experienced that, like in their defense, like how can they actually make a decision on whether you're right or wrong? And so if that thing plays out, you just need to be there to say, okay, with no judgment, let's get into it and here to help. But it's difficult.
Adjacent to that was overfunded ego. And I think we talk about this a lot, but indexing to capital raises quantums as almost a measure of success, and it just leads to poor decision making. It changes the dynamic of how you approach decisions.
Well, that US call I just had to leave for, and it's not a tribe one, it's a family office investment before I got there. But it's just funny when you give people lots of money and then advise them not to do certain things, and then they go and do certain things and they run out of money, and then they get upset that you're not going to A, give them any money, and B, you're going to replace them. It just is a little bit weird because just work out the chain of causality.
Yeah, exactly.
I'll put that chart in there because there's some other great ones in there, but I just thought it was a good little thing. But every one of these, you can take the opposite, like solo founder syndrome. Well, the opposite of that is having co-founders that kill you, right? The wrong ecosystem, yeah, sure. But if you're in like a really strong ecosystem where you can't cut through the noise, you're fucked. Like, and this is the empathy we have to have for the founder journey. It's not easy.
Yeah.
Now, one of the reasons why some companies die is that you run out of money, and sometimes there's an over leveraging on. I think Aaron's just clicked on it. I'm about to see his face change. Anyway, so in this data day and age, especially bank funding, R&D funding, yeah, now he's started reading it. Now he's contemplating the continued brand damage that I seem to want to do to this company through this podcast. Like, it is a real thing that a lot of data is getting ingested, and investors are making decisions based on it. Banks are making decisions. Customers are making decisions. This is tongue in cheek. It's real. I'm just trying to use it to do a point, but an accountant, Chester Campbell, said that one of his clients had nearly $12,000 in OnlyFans transactions in 1 month, not income, expenditure. And what he's just trying to say is keep your personal spending out of your business account. A business owner came to us with $11,982 racked up across 67 OnlyFans transactions. He says, funny, yes. Lender friendly, absolutely not. Okay, this is just a bit tongue-in-cheek, but we are getting stories now where actually the data gets ingested and you were 2 days late on super, bow, or your BAS wasn't up to date on time, bow. Like there are so many parts of your, let's call it credit history, that as the world goes on, that data is going to get to certain points where it's actually going to determine your future. And entrepreneurs can be a little bit flippant about these things, but you've got to be so careful.
That is so bad. But we do, like, I know this is an extreme example, but we do, like I've seen this a lot, that the transactions that go through a business account, which should not be in there. And one of the things in any data room, one of the first things I look at is the balance sheet and trying to identify these kind of random behaviors that you can pick up pretty quickly. But yeah, wow.
Jack, the lesson for founders?
I've got nothing here either.
Keep your spending clean.
Yes.
They're shaking their heads at me. They're just saying, move on.
Segue.
Theme of the week. Ash, I'm just mindful of your time. Do you want to kick us off? You got any themes that you've been patterning apart from the fact that 125 calls in one day yesterday? I assume not to the same person.
No, not to the same person, thankfully for them.
Yeah, because have we mentioned to the listeners that we have a fund we're trying to close, and Ash, if you just send in your phone number, Ash will call you.
Yeah. That's a bit scary. People are, yeah. Anyway, but yes, if you have money and would like me to call you, please send in your phone number. That is. No, I think like an interesting observation is the amount of uptick on text versus phone, and the amount of voicemails that now say, if you want me to get back to you, please don't leave a voicemail and send me a text. So going through our system and trying to actually log that. So going forward, you're not even going to get a missed call from me. I'm just going to go straight to text.
Yeah, but some investors will read an IM and just send a text in 50.
Yeah. Or
they don't want a phone call from us.
No,
just
or
send me
they'll give me a thumbs up.
Yeah.
And even just someone coming back saying yes, no, thumbs up, thumbs down, that's really helpful for us. And I think that's probably something we're not overtly saying as well, where it's like, hey, we won't bother you if you just give us an indication. And, I think part of what I would love is if you are part of this ecosystem, whether you're an angel, whether you're someone who's just trying to learn, actually being like transparent with syndicates and funds about whether you are actively looking to invest, whether you're just on the learning journey, and then just giving us a thumbs up, thumbs down, or giving us a, yes, we're interested, not sure, have some questions. Like that for us is extremely valuable because everyone's time is precious.
Yeah, and I think a pass is more valuable than nothing. Like at least it gives us some feedback, and then like we know you're not in this deal. Like I can worry about the next person.
Yeah, and Ash, your point there, like we know there are people in the syndicate that they're reading the IMs, but they won't invest in it. It's educational or out of interest. We're fine with that. Just openly say that, and it's not a problem.
Jack?
Theme for me is mostly just been around the memo. So I suppose it's nothing new here, but it's just crazy to think GPT is only 1,000 days old, and like our role was just so much harder pre-ChatGPT.
And for listeners and for any deals coming up there, we have all security protocols. So your private information is not getting shared with any models. No models are being trained on your information, and everything is done in a secure way. Just a little disclaimer there. And we are using our brain and insights and putting together these memos as well.
You know how we normally have a financial disclosure statement? I feel like it's the intellectual disclosure statement.
Yeah.
Like we are still using our brains despite using AI.
And also the AI disclosure of, we are doing this in a safe and secure manner. Please be assured that your private and very sensitive information is not going anywhere it shouldn't be going.
Well, speaking of rates of change, my theme of the week has been brewing for a bit. I always think about how far behind is Australia compared to Silicon Valley or London, or name your favorite tech hub. And at different times I've thought, we're 10 years behind, we're 3 years behind, but it's really nuanced. I think in some things we are way behind, and in other things we're close. And I'm talking just about the ecosystem layout. But this came to mind because a chat with one of the investors, one of the very active investors in the ecosystem over dinner last week. And he was pitching me something. He's like, oh, well, in the US, we see this type of acquisition model, like where it's about purely about the tech. They never build for revenue. And he's going to write this blog post about it. And I'm like, oh, this feels like you've discovered a continent that's already heavily populated. Like, but it was that sense of disappointment at first in that, well, this has been done for 20 years in the US and it's a very common model. But I almost feel like and even talking about it 10 years ago, like it's almost like we have to go through the experience. Like you were talking about before, Don, founders have to go through and experience things and feel it before they understand it. I feel like the ecosystem, it's so hard to leapfrog, despite going overseas and seeing the lessons. So for me, I was a little bit disappointed in that we really are 10 plus years behind in some ways as an ecosystem, but also that reminder of how important it is to get on planes and go look over the horizon and go see other ecosystems and best practices. Because if you don't have that line of sight, you are just operating at an information deficit.
Yeah, I agree. Mine was like our portfolio has companies at different phases of the life cycle now. But one of the common things is it's founders needing to always work on things that actually make a difference. And sometimes they end up working on things that feel good and that the world tells them makes a difference, or intellectually it makes a difference, but it makes no difference. And we've got a number of companies that are looking at rebranding. And the amount of money that has gone to branding consultants in this world is just insane. And now, for me, especially in our world, the look and the feel, as long as it's not your name inside a dog turd, really doesn't matter as much as the messaging. People engage when they read or hear words that resonate with their story. Sometimes the name and the brand is telling the wrong story. Okay, no problem. Do some work. Probably not the $50,000 exercise that branding consultants want you to do, where they do these reviews and you get your feng shui right and you bring in your fucking medicine man and you do all that rubbish. But then there are people that are struggling with traction and think that a new brand or even a new name is going to make a difference, where it's actually their value proposition and the messaging around that value proposition is the problem. And sometimes they just get suckered in to working on things that just don't move the needle. And so, again, like everything else that we've discussed on this episode, there's a nuance. Sometimes rebranding is absolutely the right thing, and done for the right reasons in the right way can help. Often, however, it's just a wasted exercise. And so making sure that you have some ways of filtering what moves the needle. And, when I see a branding document that in our world has like consumer brands in it, I just tear it up and just throw it in the bin. Like, I just know that person has left the reservation, because in B2B, brands don't get built like Coca-Cola. They get built out of trust and performance, which means that your early customers didn't know about you, but they liked you and they liked the message and it resonated with their story, and that's how you got momentum.
Yeah, 100% on that. And that's where Helmer's 7 Powers is good, like the way it talks about brand. It's exactly that word trust that's built over time.
Yeah. All right, well, quickly, let's get into some charts. This is a chart going back to 2010, and it says the market is getting smaller. We peaked in 2022 of 2,160 listed companies, but we are falling hard and down to the right. There are lots of companies disappearing off the ASX. Our market is getting smaller and smaller. We had this sort of like, the trend had started pre-COVID, and then we had this post-COVID boom, and then now it's falling, which all flows into this whole liquidity issue. This is the year-over-year percentage change in new car registrations across Europe for July 25. Tesla is down 40% year on year, and all of the older school companies that are now introducing electric and doing it in a much better way than Tesla are all coming up. So I think that's the continued trend. This is a chart of the margin debt in the US going back to 1997, which has gone from 100 billion to a trillion, and it's just up and to the right. There is so much margin debt out there feeding these markets. It's a little scary. Simon Beard had this in one of his videos, his little picture. I quite liked it, that in a lot of things you got to get from the idea to results, but you got to cross the bridge of cringe, and it's cringe within self, whether that's sales or putting yourself out there or looking back at the things you did 5 years ago. If you don't cringe, if you're not willing to step on the bridge of cringe, you're not going to get across there. And I thought that's quite right.
I like that.
I'm just trying to find ways to validate my levels of cringe from time to time. This is just something fun and uplifting. This is the murder rate per 100,000 residents in the US, broken up by state. You don't really want to be in Louisiana or New Mexico by the look of that, Alabama. And then Utah, New Hampshire, they drop well down. But yeah, it's sort of like 14 or 15 per 100,000 all the way down to 2 per 100,000. So a little bit of a difference. This is the percentage reporting despair in different age categories and by different cohorts. So the cohort of 2019 to 2024 is actually a much higher percentage reporting a feeling of despair than their prior cohort. But what's interesting is despair is much higher pre-50. And then once you've reached 50, it looks like you've sort of, I don't know, is this chart showing you just give up and you accept it is what it is and your despair drops? Because the despair rate between a 70-year-old and a 30-year-old is about half. So is that a good thing because you just accept things are the way it is, or if you've just given up?
Oh, yeah. Despair is relative, so I think it's trained. So I think that the data kind of makes sense to me.
And so then if you then look at age by generation, despair in 0 to 30-year-olds has been increasing generation after generation, which I think makes sense just given the fast-paced world, the way capitalism has treated the young, of the wealth transfer from young to the wealth to the older demographic. Like, it's just every generation is reporting higher and higher levels of despair, which in itself is something to despair about and something that's not going to be good for us long term.
Well, I think there's an increase in expectation, and the unmet expectation leads to the sadness, which feeds the despair.
Yeah, true. I mean, if you're looking at Instagram all the time of everybody only putting up all the great things that are happening in their life and you aren't keeping up with the Joneses, I do think social media has well and truly added to that.
Yeah, versus my mum, who was a wartime baby who had nothing and expected nothing and therefore no expectation.
So this is the correlation of screen size and to then importance in your company. So the screen size at CEO level starts at a phone, and then executive iPad, upper management laptop, middle management one desktop screen, corporate slave 2 or more desktop screens. I
sit at my desk with 3 screens.
Yeah, I think an emerging manager in a effectively a startup with the phone, 3 screens, a laptop, like where do we sit?
Yeah. But then I also think of Baxter with his 17 screens on his desk.
Oh, when we went into their office, Jack and Ash, I don't know how the guy's not blind. What do you think this is a chart of? So someone's done a study calculating the size of brain, and porn consumption shrinks parts of your brain.
I've heard of other studies around this.
But some of these dots, so pornographic consumption hours a week, who is spending 5 hours a week?
It's taken me a moment to digest this chart, but...
How did you find this? It found you, didn't it? It found you.
No, it wasn't an intervention, just to be fair. But in a serious note, I do actually think between social media, ease of access to porn, the kids coming through, it fucks up parts of your brain. And I look at parents who aren't regulating children, especially in those development years, and you are creating a potential risk of someone that has a lot of difficulty in the future.
I just get so bored. I don't know how people sit on social media. 5 minutes and I'm like, all right, I'm bored.
Okay, I wish. Okay, finally, doctor, do you exercise? Me, I'm a runner. I run for my problems, I run late, and I run my mouth.
Why is there not your face on this?
Exactly. All right, what are we looking forward to? We're about to do a investor call with Gasbot's new round. So we've got all of our investors coming in to hear directly from Phil. I won't spoil it, but there's been a South American deal that he's been sweating on for a bit that yesterday morning dropped with one of the largest orders they've ever had. So those are exciting moments.
I'm super excited for this call. And Ash, well done on getting the, it looks like we've got quite the audience for this one. A lot of investors dialing in.
Yep. And they want the recording. So just learnings from the last one. Make sure you pin Phil.
Yes, good reminder.
Yeah, no, don't do what we did last time. That took me like 4 hours to edit properly.
Yes, good reminder. I will actually write that down.
I'm looking forward. I get to go and see my uncle in hospital today. So he said he's now up for visitors. So that's really good.
Oh, great. All the best for that, Ash.
Thank you.
Difficult times, but if you need anything, we are here.
Thank you.
Yeah, hope all is well and he's recovering fast, Ash.
Yeah. So excited for that. It'll give me a little perk in my step.
Jack, what are you looking forward to?
Looking forward to watching the Wallabies play tomorrow against Argentina, just on the telly. But the Wallabies are back, so it's good to see them. And then after that, actually going to watch more rugby, but watching Brighton play their semi-final. So it's just all rugby tomorrow.
Are you taking little Louis?
I don't know. I'll wait and see. If Anna.
How's Louis' sickness been?
He's all good. Yeah, he's finally not sick, so he's good.
Has the egg on his head? Is it gone away?
Yeah, he's still got a big head, but he doesn't have an egg.
You've got so much ahead of you. Like this last night, I had a Coke Zero on the airplane on the way home, which I shouldn't have done. And then I couldn't sleep properly. And then Jack needed to go to the toilet at 11, but it was dark. And I yelled out, "Do you need a hand, buddy?" He's like, "No." And then I hear this, "Oh, I can't see. I've missed." He was facing the wrong direction. Like,
Why did you put the light on?
So, all right, we'll catch you.
All right.
See you guys.